actually been overweight industrials because we do like the pro-cyclicality of it. We also like prices relative to the fundamentals. You look at kind of across the board, and granted, valuations, knowing that and having a nickel really won't buy you even a cup of coffee, especially in the short term. But, we are optimistic about the economic outlook, and we like the valuations in that space. And so that is an area that we are overweight. But, as you point out, it is a grab bag of different exposures. Now, I'm not allowed to talk about individual stocks. I'm sure Ron probably is in a better position to do that, at least from a compliance perspective. But we are optimistic about it, but it is really a grab bag. We like domestic exposure. Going into the election, we think that kind of no matter who wins, whatever the composition of Congress is, that the U.S. economy itself has a decent amount of momentum, and it's likely to continue, not just for the balance of the year, but even for the foreseeable future over the next few years.
Mm-hmm. I guess, Ron, what I was driving at there in asking Brian about what is an industrial is that there's some ambiguity in my mind. For example, is Apple an industrial stock or a tech stock? Where would it be categorized? Is Pfizer an industrial, a manufacturing stock, which it most certainly is, or is it a healthcare stock? Explain.
Well, listen, I would go with respect to the first. I would suggest it's a consumer stock with a platform that involves a great deal of advanced manufacturing. And in many ways, Pfizer could be characterized the same way. When you're talking about core cyclicals and industrials that would benefit from, let's say, a large infrastructure bill, then you're talking about the earth-moving equipments, the Ingersoll Rands, the Caterpillars, the Komatsus overseas. And so I think most of this stuff is a relative value trade. You've just seen the outperformance in big cap tech, and I think a lot of us look at the underloved and underowned and think that there's at least, at the very least, a tactical trade to be put on, whether it's growth versus value, large versus small, or stay-at-home versus recovery plays. I think that trade is on. Look, I have more concerns about the economy going forward. I think we're in a W and a K, as we've discussed with respect to the shape of the economic recovery, and I worry a lot more about Main Street than almost anything else right now. I've traveled a little bit in the last few weeks, and we've seen store closings. We've seen, Main Street get hurt. And without any further relief and stimulus, I think that doesn't necessarily show up in the stock market, but it's going to show up elsewhere.
Shepard Smith here. Thanks for watching CNBC on YouTube.